One now.
Hello, everybody. I'm Dale Pinkert. Welcome to our pre-LAR market roundup. Let's have a great week. Just get my charts up here. Okay, I always like to start off with the dollar index, so let's take a look at what the dollar is doing today. We have an inside day in the Dixie, similar to what's happening in the S&Ps. If you look at the chart patterns in both the S&P and the dollar, they're like Siamese twins. Here's the dollar after that big Monday mini crash that we had in the S&Ps, and here are the S&Ps. So basically, I think that they're going to continue in the same pattern. S&Ps are a little weaker than the dollar. The move was magnified in the S&P. So the way I see it is we could continue up towards 2020, but the preferred count would be from here to see the market pull back and the dollar pull back. Therefore, we could have at least a bear market rally in euro. So that's what I'm looking for to correct the recent reflex rally off the crash low in the S&Ps, and that would be analogous to what we see in the dollar here. Same type of chart pattern. Perhaps we pull back to 95, 94 and a half. The dollar bulls are saying we're on our way to new highs above 98 and a half because they are looking for Fed hikes in September, which is still 50-50 at the best. So from here, I'm looking for at least some type of pullback after this big recovery. I mean, the euro pulled back from 117 to today's lows right around 111.80. Let's get to our instruments. So here's the euro. We really don't have great divergence here in the euro. We're actually under the 30 level, but I continue to think that there's potential for a rally back to 14.50. That's going to be kind of the line in the sand. Here's the 114 level. Pound dollar, similar situation. The pound's been a bit weaker than the euro as expressed by EG. And EG still looks like we could have another rally. I'm looking for higher levels, actually way above these highs, possibly up towards the 75 level, which is a bearish dollar position. And all last week, I was talking about looking for rallies to sell in the yen up towards 122, 2178. And that's exactly what happened. We got up to the fib level late Friday, pulling back about 40, 50 pips from there. If I'm right about the dollar, perhaps what we have here in the yen is this was ABC for A, and then we pull back and correct this bounce from 116 to 122, perhaps back towards the 119 level or so before it attempts another rally. So what we have going today, guys, is we're correcting the correction. So we had a big dollar rally after the rout through major support. We had a corrective rally in the S&Ps after the 1,000-point opening exactly a week ago, and now I'm looking for that correction to correct. So looking forward to a great week collaborating with everyone. I have Bill Luby with us today. He's a specialist in the VIX, and the VIX actually traded above 50. We haven't seen a move in the VIX like we had last week from the 13 level to over 50 in perhaps my entire trading industry. So we'll have some insights into volatility with Bill, and I'll see everyone in the room. How's that?